I read an interesting statistic the other day. Apparently, globally, Singapore leads in crypto adoption. Plus, it's something like almost 30% of us own digital assets. I did not know that. But then again, time for me to crawl out from under the rock I've been living and wonder, what about all those things we thought about crypto? They have no value, only nefarious people use it. The list goes on. It's bad for the environment, etc. Maybe we need to debunk those things. Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And if you have feedback or a podcast idea, do email us, btpodcasts@sph.com.sg. Joining me today in our crypto chat, if you will, we have Hassan Ahmed, who is the Singapore Country Director at Coinbase, and also Deborah Tan-Pink, who's a crypto communications professional. She's going to have to explain that to us. Like day in, day out, all you do is tell people about crypto, what's happening, I suppose. And it's interesting to note that Singapore leads globally in crypto jobs per capita as well. Did you know that, Deborah?
No,
Maybe
I
I'll
didn't know
start
that.
with that question for you. I didn't know crypto was so popular.
Yeah, I think part of the allure of the crypto industry is that things are always moving very fast, things are always changing. It's also kind of like signaling your participation in an emerging asset class. So, like we have our parents who went into like your stock markets and equities and commodities and FX, right? So I think one way of seeing is that you don't want to miss out when it eventually becomes big.
Don't judge me, Hassan, that I didn't know that crypto was so popular. Talk to us about maybe what the popular crypto assets are among Singaporean investors.
Yeah, thanks for having me on. So Singapore is in a very interesting place. So as you mentioned, the popularity of digital assets in Singapore far exceeds many other markets in Asia and the West as well. Some of the reasons for that, before I get into the specific assets, are that Singapore is a financial hub, then it became a fintech hub, then it extended that when it saw the potential of digital assets to become a crypto hub as well. And that's underpinned by the regulatory framework that's been in place for almost 5 years now.
But I thought because it's called the Wild Wild West, not very regulated, made it so popular, but that's not true, Hassan.
That's not true. So in the beginning, sure, there were some people that were attracted to that. But as these technologies mature, for most consumers and most users, they just want to be able to have a safe and trusted way to access these, especially investments. So I think that this is one of the misconceptions that people have, that crypto is not regulated. The reality is that just like e-money and other fintech providers, there are clear rules of the road in many markets around the world. Singapore, Philippines, Thailand, Dubai, the US is moving in that direction finally, so that you can enjoy the same protections as you do with, let's say, like a brokerage app that many people enjoy.
Safe and trusted. I don't think are two words I've heard in the same sentence as cryptocurrency. But what are the assets that Singaporeans like in terms of crypto, and safe and trusted are they?
So what our data and external market service show us is that about 68% of Singaporean consumers that hold crypto, they are at least holding Bitcoin, and about 48% are holding Ethereum as well. One surprising fact that maybe people don't necessarily see is that Singaporeans love stablecoins as well. So on our platform, we see a lot of users holding USDC in particular, but that it also speaks to the underlying utility that's starting to flourish as well.
What are your thoughts, Deborah? The popular assets.
Yeah, I agree with Hassan over here that Bitcoin and Ethereum are two of the most common and popular coins that people hold when it comes to their crypto portfolio. Stable coins also, and I believe it's because there's a yield strategy to it as well, right? Like some platforms, if you hold USDC, every month they give you a little bit of yield based on your holdings of the USDC. Solana and, Ripple, XRP are also up and coming. I think not so many, but I think people are definitely well aware of these tokens as well.
How well do they do? Or, the returns, how do they compare to, say, equities?
I would say that when it comes to portfolio diversification, you don't just hold only crypto. A lot more people are holding equities, and then maybe about 1 to 5% of their portfolio they dedicated to crypto. For me personally, I like to do something like, okay, if I have that spare cash, I put it into crypto and hoping that maybe like what we saw last week, the market, was really, really good for crypto, went up to $110,000, and then you sort of have that realize that short-term gains. So yeah, that's how I do it for my crypto in the portfolio.
Hassan, your thoughts about what sort of role crypto should be playing in an investor's portfolio? I mean, I'm quite risk averse, so excuse me whilst I dab my risk averse perspiration and you explain, the role crypto has in an investor's portfolio.
What we find is that crypto has more and more of a role to play in a well-diversified portfolio. And while none of this is meant to be financial advice, because it really depends on an individual's risk tolerance and time horizon when they're thinking about their portfolio, what we find is somewhere between 1 to 7% of crypto allocation seems to be a good starting point to start to experience outperformance. But at an individual asset class level, just for perspective, and I'll talk about return and risk, last year, Bitcoin's performance was roughly in the range of 60 to 70% on gains, whereas the Straits Times index was around 8%. That said, the flip side of that is you can only get outperformance while being able to stomach the volatility that comes with. So if you are interested to get some exposure to crypto assets, I think it's also good to have a mindset that you might experience drawdowns of anywhere between 50 to even 80% along the way. So if that's not something that you can, feel and be okay with, that is something to keep into consideration.
I would like to sleep at night. I'm not sure I could. And also, it feels like options paralysis. So many cryptocurrencies out there. What do we choose, Deborah?
Well, I think for a lot of people, it goes back to you go with what you know. So I think Bitcoin and Ethereum being in the market for so long, most people, when they first dip their toes into crypto, they would probably go with one or the other, right? It also depends on your risk appetite, So for instance, if let's say 70% of your crypto portfolio, not 70% of your portfolio, is in Bitcoin, maybe you might want to spend a little bit and dabble, in a meme coin, or you want to sort of, your friends has been talking about Solana, so you want to buy Solana, for example. So what we always say in crypto, especially in crypto comms, research, do your own research, and always go back to, the tokenomics, understand the utility of the token. And of course, finally, don't invest money that you cannot afford to lose.
So buyer beware still. And meme coins falls under that. Hassan, how do you feel about meme coins? Because is it just fun, or is it even a worthwhile investment?
I think what Deborah said at the end is extremely important, right? Being very comfortable with only putting in what you are comfortable with having severe drawdowns or losing. I think one thing that around crypto that maybe most average retail investors still don't appreciate is that the amount of correlation across crypto assets is still very, very high. So if you just hold the majors in what I would call a core portfolio, so that could be Bitcoin, Ethereum, Solana, that will basically give you exposure to most of the upside that crypto has to offer. I think anything beyond that is something that, either you just want to dabble in, or again, like if you want to invest with friends or something like that. But you just have to think of it as like maybe an active portfolio that is separate from your core portfolio. For meme coins, so it's interesting. Generally, my mental framework is that it's a trade, not an investment. So if you want to trade it, that's okay. You should just be eyes open as to what you're getting yourself into.
Hassan, you talk about correlation of the crypto assets to each other. What about what makes crypto prices so volatile, though? Correlation with what other things in the market?
Yeah, so some of where this volatility comes from is just the fact that this asset class is very new. It's emerging and it's growing very, very fast. So a lot of retail users and individual consumers have typically owned this asset class. That is now changing with a lot of institutions and even governments stepping in, and they tend to be much longer holders of investments. So we're already seeing a maturation of this asset class and the volatility dampening down.
Deborah, what do you think?
I think volatility in crypto is also quite marked by sentiment. So you have crypto Twitter. So a lot of people go in there, they say whatever they want. And then after that, you see maybe that might affect prices. I think back in 2021 or late 2021, there was talk like Elon Musk was going on Saturday Night Live, and then everyone started buying Doge coins because that's the one that he was like shilling all the time. But after that, when he went on the show, the price of Doge didn't actually go up, and everyone's like, what happened, right? So things like that kind of fuel the price volatility as well.
That's the thing that makes people nervous, though. Already global and economic uncertainty affect things, all the asset classes that you invest in. We don't need more of that to create more volatility.
But if you're a young person, I think most of the time you will be looking at MTV, or back in my days, or you'll be looking at the TV, you'll be looking at YouTube, you'll be looking at Twitter, TikTok, for example, right? And I think a lot of the content that gets fed to our younger generation, so to say, are of that sort. So in a way, you're participating in the economy and the crypto ecosystem just from a different perspective, right? That's just a different way in. So that's actually how I see it.
Let's maybe go back to basics. And has the global uncertainty, economic uncertainty, affected Bitcoin markets as well, Deborah?
Yeah, for sure. Bitcoin is always going to be one of the things that gets affected by global uncertainty. Some people term Bitcoin as digital gold. So they want to, have Bitcoin as a hedge against, maybe dollar fluctuations and stuff like that.
No, I think that's well said. I think one of the interesting things with Bitcoin has been, hey, is this going to behave more like a high growth tech stock? So almost like a tech beta, or is it going to behave more like a macro hedge? And what we've actually seen is it's done both. So back in 2021, 22, when there was, the ZERP era and there was just a lot of free money floating around and all of tech was going up, crypto was almost like an accelerator on top of it. But recently this year, with the US dollar getting somewhat destabilized, actually gold has been making a lot of new all-time highs, but Bitcoin in some sense has been lagging. But a lot of institutions and users are allocating to Bitcoin because just in case there's too much global instability, this is a credibly neutral store of value that you can rely on.
Are there other sort of common mistakes that beginner crypto investors make, aside from not knowing enough, going in blind?
Yeah. So I have a simple 4-point formula that I usually prescribe to users that are just getting started. And 3 of those steps actually are before you do anything around buying your crypto. So the first one is you have to choose a safe platform. The second is that you have to secure your account. So you have to have 2-factor authentication. And this is, again, not just for crypto, but your DBS account and whatnot. You have to have 2FA on top. The third that I ask people to do is before you buy anything that's volatile, start with stablecoins. Because you can at least start to understand what this looks and feels like without necessarily having to stomach the volatility. And then after that, when you look at your portfolio, you can start with some of the majors again that we referenced earlier, like Bitcoin, Ethereum, Solana, and just sit with it for a while and then see how you feel. Because I think a lot of behavioral economics around investing for individual investors is about whether you can stomach the volatility.
What about fees, though? When we talk about investing, fees always come into play. Are fees for trading crypto in Singapore, say, higher than for stock trading?
So I think for the Singapore Stock Exchange, it's roughly for brokerage, it's about like 0.28% that retail investors pay. Again, it's different for institutions. Crypto is interesting that you can actually trade on the raw order book, which is something that you cannot with equities. So that allows for you to get as low as 5 basis points of fees. But if you just want to go for a full brokerage experience, that can be as high as 1%.
I'm still not seeing plus points about investing in cryptocurrencies. Deborah, maybe you can help me out. It's not just about investing, right? Apparently you can use it to buy things, make payments.
Crypto as a payment, it rocks, I think, in a way. Because if you think about it, I used to be an entrepreneur. I used to be a co-founder of an agency, right? And, back in those days, whenever somebody transfer money to you using your bank account and stuff like that, there's always a fee, attached to it, like a telegraphic fee. I think they call it a telegraphic fee or something like that. And I'll always have to put on my invoice, the customer is the one who foots the bill. I'm not going to take a portion of my invoice to pay the bank fee, right? So I think crypto as a payment kind of settles that issue, kind of resolves that pain point. But I would say that it is still not a popular mode of payment simply because I'm not sure if you heard of the Bitcoin pizza story. You know, there's a Bitcoin pizza day, and it basically says like a long time ago, this guy didn't have money to pay for his pizza, and so he used his Bitcoin. You know, at that time, maybe it was like, what, 5 cents per Bitcoin or something, to pay for his pizza. And today, that pizza would have been worth millions of dollars, for example, right? So I think with that in mind, most people will not choose to use their Bitcoin as a form of payment. But stablecoins, for sure, right?
Here's the kicker. Crypto's outlook, I suppose, for the rest of the year, the next 18-24, especially since MAS, the Monetary Authority of Singapore's forcing crypto firms to register for cross-border licenses by the end of June 30th. Hassan, like you were talking about, it's regulation now.
Yeah, so in terms of overall outlook, honestly, I think there's never been a better time to be in crypto and to be thinking about crypto. For a long time, one of the biggest things that was holding the industry back was a lack of clear rules in the US. So that has all been reversed at this point, and actually the US is, throwing itself sort of headfirst into being a crypto leader. Now, with that clarity, what will happen is that it will just make space for more responsible innovation to happen. And for, again, this the potential of blockchain technology to help update the financial system. So as an industry participant, that's what I'm most excited about. From a market cycle perspective, I think we are monitoring things like, where is macro going? Is there going to be more money printing and debasing? I think all of those things will factor into the outlook, but I think the fundamentals for crypto are just improving over time, and we expect to see more impact on the financial system, not less. So I think if you have a long-term thesis for why crypto is valuable, this is a really good time to start thinking about it.
But for some of us, the price is a bit prohibitive. I'm not sure 110,000 is something I can buy into.
Bitcoin is special within all of that, in that Bitcoin has its own almost brand recognition. It has its own analogy as digital gold, as Deborah was saying. And at the moment, it's roughly about like a fifth the price of gold in terms of market cap. And that's only within 15 years, whereas gold has been around for, thousands of years. And, we just see that, that trajectory will continue to increase. So you don't have to buy one whole Bitcoin. You can just buy like a fractions, or like a few Satoshis of a Bitcoin. So it really just depends on having portfolio exposure.
Who wants that?
Yeah,
You
that
don't
was what
buy
I
the
was
whole
saying.
coin, right?
No. But I think that we have this thing called the dollar cost average, in all kinds of it's just one of the investing philosophy, right? So you can also do that for crypto, right? You buy a little bit over time, and so you kind of hedge yourself against the dips and the rise of the pricing in Bitcoin or any kind of tokens that you want to participate in.
I wish we had more time. Thank you, Hassan, who is from Coinbase. Hassan Ahmed is the Singapore country director at Coinbase. And Deborah Tan-Pink, who is a crypto communications professional. Thank you for your insights today.
Thank you.
Thank you for having us.
And this has been Money Hacks by the Business Times. I'm Howie Lim.